Hi, welcome once again to Auditing 304, Session 9, Evaluation and Review. Evaluation and review are vital components of performance improvement. To reduce audit risk and execute audit function perfectly, auditors need to re-examine evidence to determine if sufficient and appropriate audit evidence have been gathered. This session seeks to introduce students to the process of evaluating and reviewing of audit evidence, expose students to using the work of other auditors, review accounting estimates, and fair values. At the end of the session, we are expecting students to understand the evaluation and review of audit evidence, explain using the work of other auditors, describe how to audit and review estimates and fair values, discuss subsequent events, explain assessment of going concern. Chapter 8 of our key text, Auditing and Assurance Services in Ghana by Bedi, 2009, is the key recommended chapter for this session. You can also consult the session slides and other auditing and assurance textbooks available to students. Evaluation and review of audit evidence. That must be done by a different person, not engaged in evidence gathering. Because remember, if you do your own evaluation and review, you have a threat for it, self-reveal threat. So it is very important that another person different from you should do this or should be given the opportunity to do the review and evaluation. The person must have been identified at the planning stage of the audit. The person must be senior to the team that gathered the evidence. Very important. It is a continuous process. So it doesn't start and end at a point, but it goes through in the course of auditing. Using the work of auditors, we are going to consider certain aspects that evaluation and review comes in handy. Using the work of auditors. Sometimes an audit may require the use of another auditor for aspect of the engagement. You must determine who is the principal auditor to avoid conflict and to avoid difficulty in coming with agreement. When the principal auditor uses the work of another auditor, the principal auditor should determine how the work of the other auditor will affect the audit. Division of responsibility comes in handy. It comes in when you are reviewing, you see which part should be played by or which role should be handled by the principal and the other auditors. Cooperations and reporting consideration. In evaluating the work of another auditor, materiality of the portion of the financial statement which the principal auditor audits must be taken into consideration. The principal auditor's degree of knowledge regarding the business of the components, the risk of material misstatement in the financial statement of the components audited by the other auditor needs to be considered. The performance of additional procedures regarding the components audited by the other auditor resulting in the principal auditor having significant participation in such audit. Remember, at the end is the work of the principal auditor, and therefore, whatever has been done by the other auditor, the principal auditor needs to look at. The accounting, auditing, and reporting requirements and obtain written representatives as a compliance with them. So, and also, we have to look at the internal auditor. We learned that the external auditor relies on the work of internal auditor. So, in the course of reviewing it, the work of the internal auditor needs to be taken into consideration. Auditors need to understand and have prelim assessment of internal auditing. The timing of liaison and coordination needs to be looked at. That is in evaluating the work of internal audit function, their status in the organization, the scope of function, the technical competence of the internal auditor, the due professional care of the internal auditor, sufficient and appropriate audit evidence also needs to be obtained to be able to draw reasonable conclusion in the use of internal auditors' work or not, conclusions which are appropriate in the circumstances and any report prepared are consistent with the results of the work performed. Any exception or unusual matters disclosed by internal auditors are properly resolved before the external auditor can go ahead and use the work of internal auditor freely. Also, let's consider external auditors do use the work of experts. Remember, what you are auditing, you are expert in issues of accounting. But what you are auditing may come in different forms. So expert comes in handy. So when using the work of auditors, external auditors should obtain sufficient appropriate audit evidence that's such that the work is adequate for purposes of the audit. In auditing, an expert is a person possessing special skills, knowledge, and experience in a particular field other than accounting and auditing. The auditor's education and experience enables the auditor to be knowledgeable about business matters in general, but the auditor is not expected to have the expertise of a person trained for a qualified to engage in the practice of another professional occupation, such as an actuary or an engineer. So in that case, the auditor will need an expert. So the expert can be contracted by the entity or contracted by the auditor, or can be employed by the entity or by the auditor. So in obtaining an understanding of the entity and performing further procedures in response to assessed risk, the auditor may need to obtain in conjunction with the entity or independently an audit evidence in the form of reports, opinions, valuation, and statement of an expert. Examples of this include valuation of certain types of assets, for example, land and buildings, plant and machinery, works of art, and precious stones. The auditor is not a skilled person, is not a qualified person to value a work of art. And therefore, in auditing such environment, the auditor would need the work of an expert and rely on the work of an expert to audit such an environment perfectly. Also, they need to determine the determination of quantities of physical condition of asset. For example, minerals stored in stockpiles, underground minerals, and petroleum. How would the auditor be able to tell the quantity of fuel or petroleum that is stored or that is reserved underground? The auditor requires the work of an expert, and so on and so forth. So, evaluating the expert, it is important for the external auditor to evaluate the expertise of the expert. As the engagement team's knowledge and previous experience of the matter being considered, the risk of material misstatement based on the nature, complexity, and materiality of the matter being considered, the quantity and quality of other evidence expected to be obtained, the competence and objectivity of the expert, and scope of the expert's work. The source data used, the assumptions and methods used, and their consistency with prior periods, results of experts' work in the light of the auditor's overall knowledge of the business and of the results of other audit procedures. Making inquiries regarding any procedures undertaken by the expert to establish whether the source data is relevant and reliable, reviewing or testing the data used by the expert. In reporting, the auditor should be mindful on how to report on the work of the expert. That is, when issuing an unmodified auditor's report, the auditor should not refer to the work of an expert. Such reference might be misunderstood to be a qualification of the auditor's opinion or a division of a responsibility, neither of which is intended. So in reporting, the external auditor should be mindful how it goes about its report of the work of an expert. Now, let's also turn our attention to accounting estimates. How is the review done? It is important because per accounting standard, estimates are made, and therefore the auditor needs to review these estimates and find whether there are any material misstatements in it or not. So accounting estimates, saying that allowances to reduce inventory and account receivables to their estimated realizable values, provisions to allocate the cost of fixed assets over their estimated useful life, accrued revenue, deferred tax, and so on and so forth. So these estimates needs to be taken into consideration during the review and evaluation stage. That is, review and test the procedure. That is, auditors must review and test the process used by management to develop the estimates. Review of subsequent events which provide audit evidence of the reasonableness and of the estimates made. The comparison of previous estimates with actual results, consideration of management approval procedures, use of an independent estimate, evaluation of results of audit procedures. All these needs to be done so that appropriate estimates will be used or will be confirmed in the financial statement, so that when any misstatement is embedded in the estimate, it can be determined and dealt with by the auditor. We can also look at fair values. Accounting standards allow fair value, so the auditor must also pay attention to it. So the auditor must obtain sufficient appropriate audit evidence that fair value measurements and disclosures are in accordance with the entity's applicable financial reporting framework. Management is responsible for making a fair value measurement and disclosure included in financial statement. Therefore, the auditor must evaluate these fair value and determine whether they are materially misstated or not. The relevant control activities over the process used to determine fair values measurement, including, for example, control over data and segregation of duties, must be taken into consideration by the auditor. The expertise and experience of those persons determining the fair value, very important consideration the auditor must make in there. The role that the information technology has in the process of determining or coming out with the fair value. Several considerations needs to be adhered to here, and the several procedures the auditor needs to pay attention to and follow. And therefore, I will urge you and I will entreat you to read more about audit procedures when it comes to auditing of what? Fair values. The next issue I want us to pay attention to during the evaluation stage is review of opening balances. Check if the previous audited accounts have been signed by the directors and the auditors. If so, then it means that it has gone through the appropriate mechanism in terms of our company's code, and therefore either a qualified opinion was issued or unqualified, and that will determine whether something needs to be done with the opening balances or not. So what are the initial issues the auditor should pay attention to when reviewing opening balances? For initial audit engagement, the auditor should obtain sufficient appropriate audit evidence that the opening balances do not contain misstatements that materially affect the current period's financial statement, that prior period's closing balances have been correctly brought forward to the current period, or when appropriate, have been restated. Appropriate accounting policies are consistently applied, or changes in accounting policies have been properly accounted for and adequately presented and disclosed. The accounting policies followed by the entity, the procedures the auditor should follow. One should pay attention to the accounting policies followed by the entity, whether the prior financial statement were audited, and if so, whether the auditor's report was or were modified or unmodified, the nature of the accounts, and the risk of material misstatement in the current period financial statement, the materiality of the opening balances relative to the current financial statement. Comparatives, another important aspect of accounting. Under comparatives, we have the corresponding figures and comparative figures, saying that the auditor should determine whether the comparatives comply in all material respects with the financial reporting framework applicable to the financial statement being audited. So let's first of all turn attention to corresponding figures. Know that in recent times, when we prepare a financial statement, for example, in 2016, you have the current year 2016 and the corresponding figures 2015. So the auditor needs to pay attention to it, since both will be in the annual report or the financial statement. These are amounts, the disclosure for the preceding period, which are included as part of the current period financial statement. These corresponding figures are not presented as complete financial statement capable of standing alone, but are an integral part of the current period financial statement intended to be read only in relationship to the current period. Also on comparative, these are amounts of other disclosures of the preceding period which are included for comparison with the financial statement of the current period, but do not form part of the current financial statement. So what are the audit procedures auditors should pay attention to for corresponding figures? The auditor must obtain sufficient appropriate audit evidence that the corresponding figures meet the requirement of the applicable financial reporting framework. Also, accounting policy